NIO stock is heating up like we haven't seen in a long time. In the last month alone, it's ripped more than 35%, and year to date the gains are near 50%. That kind of move grabs attention. But here's the real story. The rally isn't just technical momentum. It's being fueled by new product launches, record pre-orders, price resets across its lineup, and the wave of optimism ahead of earnings. The big question now is not whether NIO has momentum. It does. The question is how far can it actually rocket before reality checks in. If you're serious about understanding whether this run has real legs or if it's setting up for a hard fade, make sure you subscribe. Let's get into the details that matter right now. Mark September 2nd on your calendar. That's the day NIO reports second quarter earnings before the US market opens. And this is not just another earnings call. This one could decide whether the stock keeps climbing or slams back down. Wall Street analysts are cautiously optimistic heading into this report. What's driving the optimism? Two things: demand for NIO's flagship 3-row ES8 SUV and the momentum from the mass market Anvo L90. The ES8 pre-orders opened in China recently, and it's already drawing in a wave of interest from buyers looking for a luxury EV with scale and performance. This is exactly the kind of model that puts NIO in direct competition with Mercedes, BMW, and Audi in its home market. On top of that, NIO is playing smart on pricing. It cut prices across its long-range lineup, making the vehicles more competitive without cheapening the brand. Combine that with the Anvo L90, which is quickly becoming the company's breakout mass-market play, and you've got a lineup that appeals to both premium buyers and the broader consumer base. Earnings day will answer a simple but critical question: does the rising demand actually show up in revenue and margins? If it does, this rally could keep running. If not, the gains could unwind just as fast as they arrived. JP Morgan Chase recently boosted its target on NIO to $8, and that single call put more fuel on the fire. Their analysts argue that improving deliveries, operational adjustments, and a stronger brand story justify higher levels. That was enough to wake up a lot of retail traders and institutions alike. But the street isn't unanimous. Some firms remain cautious. They point to ongoing unprofitability, heavy R&D spending, and the risk that mass market expansion burns more cash before it generates returns. That split is important, because when the analyst community doesn't move in the same direction, volatility spikes. Every data point, every delivery report, every headline about China's EV policy, all of it will swing the stock harder than usual. Think of it this way: bullish calls like JP Morgan's act like accelerators, but cautious voices are the brakes. Right now, both are being pressed, and the stock is caught in that tug of war. Let's pause here and focus on why this moment is so critical. NIO isn't just another EV startup trying to survive. It's already proven it can scale. The question is whether it can transform that scale into sustainable profitability while expanding across different segments. That's exactly what September's earnings will reveal, and it's why investors can't afford to ignore what comes next. Before we continue, if you've been following this channel, you know I don't waste your time with hype or guesswork. I focus on research, real insights, and tools that can actually help investors. That's why I've partnered with The Motley Fool, one of the most trusted names in the investing world for over 20 years. You'll find my link in the description. Is the easiest way to check them out and see what they offer. That link also gives you access to special deals or discounts they have available right now. And yes, it helps support the channel too. Now let's get back to the video. Two forces will decide how far NIO can rocket from here: delivery momentum and financial discipline. On the demand side, all eyes are on the ES8 and the Anvo L90. Early signals are strong, but Wall Street wants to see if those early pre-orders hold steady through third quarter. It's one thing to sell out in the launch phase. It's another to prove that the model has staying power in a highly competitive market. On the financial side, margins matter more than anything else. Price cuts can inflate delivery numbers, but if they crush profitability, the rally loses credibility. That's why analysts are laser focused on gross margin trends, cash burn, and operating losses this quarter. If those numbers show improvement while volumes rise, it validates the bull case. If they don't, the bears will have all the ammo they need. Zooming out, China's EV market is the most competitive in the world right now. BYD, Tesla, XPeng and Li Auto are all fighting for the same customers. What separates NIO is its strategy of building a multi-brand ecosystem. The premium line appeals to higher income buyers, while Anvo and Firefly target the broader base. That's a bold move, but it also carries risk. It requires heavy upfront spending, and with regulators cracking down on destructive price wars, companies that can't balance scale with profitability will fall behind. If NIO can show in second quarter that it is executing across these layers, it puts itself in the lead. If not, the competition will take that market share quickly. NIO's stock is moving because it has a story that people want to believe in again. Premium SUV launches, smart price adjustments, and mass market momentum. But belief alone doesn't move stocks for long. September 2nd earnings will decide whether this is the start of a long-term run or just another short-lived bounce. If NIO delivers both strong top-line growth and margin improvement, the stock has room to rocket much higher. If earnings miss or margins disappoint, the recent gains could evaporate fast. Either way, this is the moment that defines NIO's trajectory for the rest of 2025. Subscribe now because when those earnings hit, I'll break them down into the numbers that actually matter for your decision.